Welcome to the deep dive. We're your shortcut, really, to cutting through the corporate noise. Today, we're taking a closer look, a deep dive into the latest Q1 FY26 results for ITC Hotels Ltd. That's for the quarter ending June 30th, 2025. Our goal, like always, is to dig through the official reports, pull out the key facts, the insights, just get you up to speed quickly on this major Indian hospitality player.
Exactly. And for this, we've gone straight to the source. We're looking at their official media statement, the investor presentation, and the unaudited financials for the quarter. All of that just dropped on July 16th, 2025. So it gives us a really solid, comprehensive picture of what's been happening.
Okay, let's unpack this then, starting with the big numbers. How's the financial health looking for ITC Hotels in Q1 FY26? What are the core figures telling us?
Well, the top line figures are certainly robust. The company actually hit its highest ever first quarter revenue and profits. So on a standalone basis, revenue reached 783 crore. That's a really strong 20% jump compared to Q1 last year, FY25. And profit after tax, PAC as it's called, that soared by an impressive 47% year over year, hit 150 crore. Then if you look at the consolidated numbers, including subsidiaries, revenue was 860 crore, also up 20%. And the consolidated PT showed, well, a powerful 53% growth. That came in at 134 crore.
Wow, okay. Those are genuinely impressive numbers, especially, given some of the global uncertainties floating around. But revenue is one thing. What about efficiency? Do they manage costs well? How efficiently are they operating?
Right, that's where the operating profit figures really shine a light. Their standalone EBITDA margin,
Yeah.
that's a key indicator of operational profitability. It stood at a strong 32%.
Mm-hmm.
And maybe more importantly, it expanded by 130 basis points.
130 basis points. So for every 100 rupees in revenue, they're keeping an extra 1.3 rupees as operating profit compared to before.
Basically, yes. And their standalone PD margin also saw a healthy bump. Climbed to 19%, that's up 360 basis points. And this wasn't accidental. It seems driven by a few things. Higher RevPR's revenue per available, room good growth in food and beverage, more management fees coming in. Plus, it looks like some smart structural cost changes and, just benefiting from operating leverage.
Operating leverage, right? That's a term we hear a lot. Can you quickly break down what that means for listeners in this context?
Sure. Basically, operating leverage means as their revenues go up, their fixed costs, think rent, maybe some admin salaries, they don't increase quite as fast. So each extra rupee of revenue contributes, well, more to the bottom line, to the profit. And you can kind of see that here. They mentioned specific cost improvements like people cost as a percentage of revenue actually went down from 24.9% last year to 23.7% this quarter. And other costs like operating and energy costs as a percentage of revenue, they also saw reductions. It really points towards a focus on core efficiency.
Okay. So it sounds like this strong performance is really coming from the core business, the day-to-day operations. Were there any, unusual items, one-time gains or losses that might have inflated these figures?
No, the reports don't seem to indicate anything like that. No specific one-offs mentioned. The performance is really pinned on core operational strength and strategic management. It seems to be all organic growth and efficiency gains.
Okay, good. Now, this is where I think it gets really interesting. Beyond the financials, how did the hotels themselves perform? What about things like occupancy, room rates?
Yeah, the hotel segment itself did exceptionally well. Average daily rates, ADRs, they grew by a solid 9%, and occupancy was up too by 275 basis points. Put that together, and you get an overall RevPR growth of 13%. But here's the fascinating bit, I think, how ITC Hotels really stood out from the crowd. They commanded a remarkable 34% RevPR premium over the industry average. And that's specifically looking at the luxury, upper upscale, and upscale segments they compete in.
Wow, 34% premium over the industry.
Yeah. And it wasn't just an average thing. It was seen across different cities. Like Hyderabad, they showed a 71% premium. Jaipur was even higher, 75%.
A 34% RevPR premium that's significant. What does that tell us? Is it their brand strength, pricing power? What allows them to command that kind of lead?
It really speaks volumes about their brand equity, I think, and the perceived value they offer. It's not just about fancy rooms. It reflects, strong customer loyalty, the service quality, maybe unique dining, and their ability to pull in those high-value travelers, both business and leisure, who are willing to pay more for that experience. It really shows that their investments in quality and brand are translating directly to revenue per room.
Okay, so given that strong RevPR growth, what were the main drivers? Was it business travel coming back strongly or more leisure, maybe events?
Well, room revenues saw strong growth across pretty much all segments. retail, MIC, that's meetings, incentives, conferences, and exhibitions, and the wedding segment, too. They specifically mentioned higher MOIC movements and, interestingly, auspicious wedding dates falling in the quarter, which gave things a boost. And food and beverages, F&B revenue, also saw robust growth, up 13%, mostly driven by banqueting and outdoor catering. And actually, a neat detail, their signature F&B brand, Avertana, it even went international with a pop-up in France back in April, showcasing their regional cuisine over there.
Interesting. Did they actually expand their footprint this quarter, new hotels opening, or are they focusing more on management contracts?
Oh, they definitely expanded. It was actually a pretty big quarter for them on that front. They hit a key milestone, crossing the 200 hotels mark. So now they have 143 operational and another 58 in the pipeline. Just in Q1 FY26, they signed 8 new hotels. That adds around 700 rooms in places like Bodh Dehradun, Goa, Lucknow, Manasar, Mysore, Ranthambore, and Vrindavan. And central to all this quick expansion is what they call their asset-right strategy.
Right, the asset-right strategy. Can you unpack that a bit? How's that different from just building and owning hotels, and why is it important for them?
Sure, it's actually a pretty clever approach. Instead of needing the capital to own every single property, they're focusing on capital-efficient growth. That means more partnerships and management contracts. So they manage the hotel for the owner. This lets them expand faster, especially into those tier 2 and 3 cities where they see growing demand for premium hotels, but without tying up huge amounts of their own money. It makes the growth more agile, less capital intensive. And looking ahead, their target is ambitious. 220 operational hotels, over 20,000 rooms by 2030. And get this, about 70% of that portfolio is expected to be managed properties, not owned.
So, mostly managed, but are they still investing and owning some property?
Yes, absolutely. It's not all asset light. They're still making strategic investments in owned assets. Just this quarter, the board approved a pretty significant spend, around 328 crores, for a new hotel they'll build and own in Visakhapatnam.
Okay, balancing the strategy. And what about internationally? Any movement there?
Yes, their first international hotel, the ITC Ratnadipa in Colombo, Sri Lanka, which opened back in April 2024. Apparently, it's scaling up really well.
Yep.
And it's already achieved market leadership there, which is quite something in such a short time.
Impressive start overseas. Okay, moving beyond just new hotels and the finances, how are they using technology? And what about customer loyalty? That seems so critical these days.
That's a really important piece of their strategy, it seems. They've just launched a completely revamped Club ITC loyalty program. And it's not just a minor update, it's described as reimagined. It introduces tier-based earning, a new digital interface for real-time access and rewards, and milestone-based bonuses. Their food loyalty program, Culinaire, is now integrated seamlessly. And a big perk, points apparently never expire for active members.
Points never expire. That's quite a hook.
It is. And they've even added a new lifetime tier called Platinum Select for their absolute top patrons. It's clearly a big push to drive retention, get guests spending more through this integrated high-engagement loyalty system.
That does sound very comprehensive, designed to really lock customers in. Are there potential downsides, maybe challenges in rolling out something like that consistently across so many different hotels?
That's a fair point. Consistency is always the challenge, isn't it? Ensuring that level of service matches the promise across all properties, making sure the tech works flawlessly, managing the cost of those rewards. But the bet, clearly, is that the payoff in repeat business and higher customer lifetime value will significantly outweigh those operational hurdles and costs.
Oh, sense. Now, beyond the customer, what about sustainability? It's such a huge topic for companies and for consumers, too. How does ITC Hotels stack up?
Well, here, they're not just ticking boxes. It's actually quite fascinating. ITC Hotels is genuinely a global leader in this space. They hold the largest number of LEED Platinum certifications. There's the top tier for green buildings for hotels anywhere in the world. 23 of their properties have it. And just in Q1, the ITC Grand Farat in Gurugram got the LD0 water certification. That adds to the 9 they already had, which were, by the way, the first 9 in the world to get that.
First 9 in the world.
Yeah. And they also have 12 hotels that are LED Zero Carbon certified. Again, the first 12 globally to achieve that specific certification. They've even blown past their 2030 greenhouse gas emission targets, the ones set under COP21.
Those are really groundbreaking sustainability credentials. But how does that translate into, business value? Are customers actually choosing ITC because they're green, or is it more about operational savings and brand image?
That's the million-dollar question, isn't it? I think it's becoming a bit of both increasingly. Operationally, yes, it definitely saves costs, long-term water, energy efficiency, but the brand reputation and customer choice factor
Mhm.
is growing fast. You have discerning travelers, especially younger people, corporate clients too, actively looking for sustainable options. So while maybe you can't point to one booking and say that was purely sustainability, it absolutely boosts their brand appeal, helps attract talent that cares about these things, and positions them as a responsible leader. That definitely translates into a competitive edge and potentially, yeah, better valuations down the line.
Okay, so pulling it all together, what does this mean in the bigger market picture? How's the Indian hospitality sector doing overall, and what are the main economic factors influencing things?
Right, connecting it to the macro view. India's long-term growth story looks, well, pretty intact, despite those global uncertainties and geopolitical issues the company mentioned. The IMF, for instance, projects India will stay the fastest-growing large economy in FY26. And you've got strong domestic demand, rising urbanization, good demographics, growth in services. All these are powerful forces, sort of tailwinds, pushing the hospitality industry forward. They did mention a temporary dip around May 2025 due to some geopolitical events, but the sector bounced back progressively. Plus, the government's focus on improving infrastructure, connectivity, creating jobs, promoting tourism, that's all expected to keep driving growth. Actually, aggregate room demand in India is projected to grow faster than supply over the next few years. That's generally a very healthy sign for the sector.
Okay, so we've really covered a lot here. We've seen a picture of ITC hotels showing strong financials, a pretty aggressive but strategic expansion, especially with that asset-right model, and also a really deep commitment to customer loyalty and, frankly, groundbreaking sustainability leadership.
Indeed. This deep dive really highlights how a company can, not just ride favorable economic waves, but actively shape its own future. They seem to be doing it through that smart asset-light growth, constant innovation in the customer experience, and, yeah, that very visible, very strong emphasis on environmental responsibility. Feels like building resilience for the long term.
So, what does this all mean for you listening in? As you watch the hospitality industry, maybe think beyond just the headline numbers. Consider how these long term strategic pillars, like leading on sustainability, like those integrated loyalty programs, how they really contribute to a company's resilience, its competitive edge.
Yeah, and that brings up, I think, an important question for all of us to think about. In this era of, well, heightened climate awareness and just rapidly changing consumer expectations, how much more will a company's verifiable green credentials and its commitment to the whole guest experience, not just the room, but everything around it, how much more central will that become to market leadership and maybe even to its valuation in the years ahead? Definitely something to ponder as you look at the future of travel and hospitality.